Well, good morning, everyone. Thank you for joining our third week of the Small Credit Union series. We are excited this week to introduce again Dolphin Debit and Synergent Marketing Services. This 4-week series has been made possible in collaboration with my colleague Christine Davidson from the Association of the Vermont Credit Unions. And it's something that we will try to duplicate again in the fall to introduce all of our credit unions to new vendors and new solutions that are affordable for our small credit unions. Christine, I will turn it over to you to do the introductions, and thank you for joining.
Well, thank you, Dean. So starting off, we have Dolphin Debit, and Joe Woods will be the presenter. He has spent more than 2 decades serving financial industries. His experience spans key roles in organizations like Dun& and Bradstreet, Liberty Enterprise, Corporate One Federal Credit Union, and as a co-founder of Legacy Member Services. As a pivotal member of CU24's senior management team, Joe contributed to the organizational success. Currently serving as Senior Vice President of Marketing and Partnership for Dolphin Debit Access, a division of Euronet Worldwide, Joe continues to drive innovation. In 2016, he earned the Credit Union Development Educator certification from the National Credit Union Foundation. And if you have any questions during the presentation, please either put in the chat or you can unmute and then ask the question. So take it away, Joe.
Fantastic. I appreciate it. Thank you, everybody, for attending today. And I'm sharing my screen right now. Can everybody see my screen?
Yes, but it's not on presentation mode.
Yep, I'm moving it there now.
There you go.
Perfect. All right, fantastic. All right, so we will get right to it. I just have 3 or 4 slides to really walk through today, but just to give you an update on some of the things that are happening in the ATM and ITM industry. What's new, what's changing, what's plaguing us as we try to move along and operate our ATMs effectively. I work for an organization, Dolphin Debit. We're a partner of the Vermont Association as well as the Cooperative Credit Union Association. So we have a lot of credit unions in the area in the marketplace that we're talking to. So this is really good information, and it's information that we share with all of our credit unions, all of our prospects that we're talking to. So we always like to start off with some trends of what's happening in the marketplace. That first block, Armor performance, is probably not surprising. Armor is performing at an all-time low. Whether it's Garda, Brinks, Loomis, even even your regional providers are really underperforming. So it's been very challenging. About 62% of the downtime that our fleet suffers, which isn't much, but 62% of the downtime that we suffer is a result of Armor CIT services causing an issue at an ATM and bringing it down out of operation. So it is something that is continuously causing issues, whether it's not bringing the ATM back into service, leaving straps on the cash, leaving the door open, maybe forgetting to balance the ATM properly or key in the correct numbers that are being loaded, the inability or the a lack of being able to pull the deposits and return the deposits to the branch. There's just so many different things that that Armor can do that can affect the ATM operation. So it's really key if you have ATMs that are away from your branch, ATMs that are loaded by Armor services, to work with them very closely, to know who's loading them. And if you see some new employees out there, some new staff members out there, offer them some training services, make sure they're trained. We work hand in hand with Brinks and Loomis across the country and globally for training purposes. So we actually do a lot of hands-on training with Armor CIT, even though they're not employed by us. They're just one of our partners. So some of the other interesting stats that everybody talks about a digital society, but cash really isn't going away. Before COVID, cash was responsible for about 20% of the transactions in the United States, and it still is. So here we are, 3 years removed from the pandemic, living our lives normally, although you do still see a few masks out there. But people are still using cash. A lot of the metro areas, you don't see as much cash usage, and a lot of facilities like baseball stadiums, different arenas, and things like that have gone cashless. So you have to use your card. But that still doesn't stop people from carrying cash, using cash as a safe haven, storing cash in their house for emergency funds, which has become, it's actually increased since COVID. So that's something to be aware of. I think it was about $200 ahead of time or before COVID. People were storing as an emergency fund, and now they've got close to $400 in emergency cash at home somewhere that they're storing just in case. This slide is great. We update it all the time. This really gives you a look at what is either happening, maybe what's just happened, but is still affecting the marketplace, whether it's your ATMs or somebody else's ATMs, what's going to be happening very soon and what's coming down the pike. So some of the things that I'll call out, there have just been so many changes and so many dynamics with all the major players. At Dolphin Debit, we're equipment neutral. So we get to see all of these issues, all of these changes in real time. In equipment neutral, by that I mean we buy and operate Diebold, NCR, Hyosung ATMs. So we're not a VAR. We're not selling you one specific product. We're basically proposing what's going to be best for your credit union. So in our fleet, we operate all the makes and models of all the major players. So we see the trends, we see the issues when they start having parts issues or when there's a chronic software issue, something nagging, on the CPU at the ATM. We see it and we experience it and we get to deal with it, which, yeah, sounds painful. And it is, but at the same time, it's very good because it gives us a very good view into what ATM, what service is going to be operating at its peak now and in the short term. And that's what we use to be able to talk about solutions for our clients. So, but you can see the laundry list here. Obviously, everybody knows Diebold filed for bankruptcy last April, I think it was. And of course, they released their fourth quarter results last year and touted how amazing they were. But sure, when you write off 3.9 billion, in debt, of course your numbers are going to look great. But don't let that fool you. They're still suffering from a ton of problems, and they're still charging an arm and a leg for their software. Every time there's a software upgrade, they want to charge you for certification for it. It's just, it's a big battle. NCR is having their own issues. They suffered a major ransomware attack last year. They actually paid it, didn't tell the government. And I don't know if they're under investigation because of it, but I know some things are happening. But in the fall, their company split in two, and they're still having some issues with that, separating the company out to two different entities. And then Hyosung, Hyosung has come out with a couple of new product lines, has revamped one of their old product lines. They just moved one of their manufacturing facilities from South Korea to Vietnam, which is causing some delays in replacement parts. So there's just, you can't get away from all three of these players having some sort of issue that could be causing you delays, causing you downtime at your ATM. So if you own your ATMs today, if you're not in an outsourced capacity like you would be if you're one of our clients, next year there is a new PIN pad requirement on all the ATMs. Triple DES encryption is going away. A new encryption service is coming out. So you're going to be responsible for paying for that change, that upgrade, that swap. And then the very next year, 2026, Windows 11 is going to be required on all the ATMs. And if you remember Windows 10, shortly after the EMV migration, the cost for the Windows 10 upgrade was anywhere from $6,000 to $14,000 in ATM. So it's probably going to be a little higher now with Windows 11, now that we're 4 or 5 years, 6 years really down the road. So, but we're always updating this, adding to it, making changes, making little adaptations to it. You can see Diebold CS. They've got a product line that's really their second product line after Optiva. Is going to be sunsetting in 2027. So they're sunsetting Optiva this year, and 3 years later, they're going to be sunsetting another line. So they're really trying to turn over a lot of their hardware. One of the things that is not going away is crime and theft, or at least the attempt of crime and theft. If you have an ATM, hopefully you have an anti-skim device on it. If not, you should get one on it as soon as possible. They really do work. The criminals are always figuring out little ways around it, but if you're getting the newest, latest, and greatest anti-skim device, it is going to prevent probably 90% of these skimming attacks. The hook and chain attack, those have dwindled. They're not as prevalent as they were about 2 years ago, where you have a truck pull up with a chain and try to rip the front of the ATM off to get to the cassettes. If you've seen the videos, it takes the criminals about 2 minutes to drive up, hook the ATM, rip it open, steal the cash, and they're gone. And it's just, to this day, nobody's been caught in the act. It happens that fast. But to their credit, all the major players, Diebold, NCR, Hyosung, they've all upgraded their hardware. They've all upgraded their dispenser mounts and their vault doors to prevent this type of attack. So you can even see in that picture, the credit union put one of those security arm bars in front of it, and the truck blew that off when they pulled the ATM open as well. So it's unfortunate, but they can still get to it. Now, if it's one of the upgraded collars, one of the upgraded units, the criminals might still try. They're probably going to do $4,000 or $5,000 in damage to the island ATM, but they're not going to get the cash just because of the upgrades to the hardware that they've all made, which is great. So the other one is the CPU access. A lot of these ATMs have a top hat, and the key is a general key. So if you have a Diebold key, you can access every Diebold ATM with this key. It doesn't get you into the vault, but it gets the top or the back of the ATM open, and then you've got direct access to the CPU, to the hard drive. And if your manufacturer, if your service provider hasn't taken all the necessary steps to lock down that computer, the criminals can put a thumb drive into a USB port and start loading malware onto your ATM, and potentially do the jackpotting, where it's just going to spit out all the cash, or they're going to try stealing your member and cardholder data. So there's a lot of different ways that your ATMs can be breached in a lot of different forms and fashion. So how am I doing on time, Christine or Dean?
You have about 15 more minutes.
15 more minutes. Wow. All right. I'm definitely not going to take up all 15, that's for sure. So ATMs and really branch transformation, but how do ATMs and ITMs affect branch transformation? That's really the key. What we are seeing in action, and also more so in conversation around the country, is how do we scale down the size of our branches? How do we reduce costs? And at the same time, how can we still offer our membership all the services that we typically can provide them? And technology is a big part of that. The ATMs and also the ITMs. And if you're not familiar with ITMs, I've always said an ATM or an ITM is an ATM on steroids. But really, think of your ITM as having the same functionalities as an ATM, but almost having access to mobile banking at the ATM, where instead of just dispensing cash, pulling cash out for the weekend, or making a deposit, whether it's check or cash deposit, now I'm moving money from my home equity account into my savings account, or paying my credit card from my checking account right there at the ATM. Those are the types of services that the ITM can bring you. So you all might be familiar with the video teller functionality at the ITM or at the ATM. That is a function of ITM. The other function is a core integration, where the ATM will talk directly to your core processor, and that opens up a larger number of transaction sets, like moving money from a home equity, paying off a car loan, paying your credit card loan, different things like that. So there's a couple of different ways that you can get to what I would call ITM. But what an ITM really means is an increased transactional set, an increased use of functionality at the terminal to make it more viable, to make it more of a resource for your membership. And what a lot of credit unions, what a lot of banks are doing, especially the larger banks, simply because they have more capital and they can move faster, is they're transforming a lot of their 3,000 square foot branches into 12, 15, 1,600 square foot branches with minimal staff, with some ATMs and ITMs in the drive-through lane, with some ATMs, ITMs in a somewhat of a teller pod fashion inside. But instead of having a teller at every station, you now have a concierge, maybe an MSR, who has a tablet and they can walk back and forth to 3 different ITMs in the lobby and serve members that way. And in a lot of cases, these branches can be vaultless, because what you could do is you could structure them, since you're only getting cash out for the members through the ATM. Well, there's no reason to have a vault. Armor can come in and load cash into all of these ATMs as frequently as you need to, and now you don't even need a vault in your ATM. So obviously you can start to think about how that can really start to shrink your footprint and what you need at a branch facility. So uh, technology is definitely the focus. There's a lot of different things that you can do with video, like the old business Skype. From a loan application perspective, there are some really nice solutions that are hitting the market right now for loan applications and really loan processing at the branch, whereby, similar to an ITM, you can have a station, a loan station in a small office with a video camera, conduct a conversation with a loan officer in a completely different office, and that member has all of the technical functionality in front of them to complete that loan right there, while they're speaking with that loan officer over the video. So a lot of unique things that are either here or almost on the cusp, to really help drive the size of that branch down for you. When you think of the footprint size, you cutting the branch size in half, what it's going to do for your physical costs, your brick and mortar costs, but also your ongoing maintenance costs and your staffing costs. If you're no longer staffing a branch with 7 to 10 people, you can do it just as effectively with maybe 3 people, and your branch is half the size. Well, you're instantly justifying the cost of that new technology, because the cost of the new technology really does pay for itself. So there's a lot of savings there, uh, especially now with what's happening in the marketplace with what I would call what they're calling for as a depression. We've noticed here, even in Columbus, Ohio, where I am, there's a lot of commercial property becoming available and not getting filled. So I do see a lot of open spots, some vacant spots that have been open for months at a time, that are not getting filled. And a lot of it is because it's too costly. And a lot of these institutions, a lot of these banks and credit unions, they want a smaller footprint. Even some retail stores are looking for smaller footprint now, just to reduce their overhead, their cost. So definitely something to consider. Does anybody have any questions at the moment?
Joe, I always think of the ATM management for, really put to good use in any size credit union.
Mhm.
Because, as you know, tellers tend to get promotions and there's usually always a teller position open. And it's
True.
hard to staff a teller line and then fund the ATM, find someone that's available because you have to have dual access to everything. And so it makes it, ATM management a lot more manageable for the credit unions because they don't have to worry about the ATM and they don't have to worry about if the ATM goes down or any of that stuff. And the technology, like you said, in 2025, the pin pads got to be updated. In 2026, the Windows. I remember when the Windows update went on a few years ago. That's when everybody was, getting really worried. The cost with Diebold was very expensive. And so it's nice when you have ATM management and then you don't have to worry about these things. You can concentrate on your members.
Yeah, that's a great point, Christine. With what we do, and we've been fortunate, even me specifically. I've had several credit unions that I've worked with, smaller credit unions, where I've helped them put in their very first ATM. They didn't have an ATM before Dolphin. One of them was Romney Federal Credit Union in Romney, West Virginia. Small town, small credit union, and now they've got a walk-up ATM in a downtown area, because of
That's
what
neat.
we're able to do for them. Yeah.
Yeah, yeah.
And you're right. It helps take some, it helps alleviate some of the stress inside the branch, especially if there's a staffing issue. But it also now gives that membership 24/7 access to cash.
Yes.
It's
Yep.
really
That's
nice.
very nice.
So yeah, so and we're very familiar with that struggle. The teller line seems to be very hard. And maybe not to staff, but to keep staff in place, to keep staff
Mhm.
there. It's very similar to what's happening with the armor companies. One of the reasons why the service and the response is slipping with armor is because they cannot keep those positions staffed. In Detroit, which is also part of my territory, one of the armor companies is down to 50% of their staff.
Oh my
So,
gosh.
and when you think of what a route driver does, typically they're trying to hit somewhere between 40 and 60 locations a day
Oh my gosh,
on
that's a
every
lot.
truck. It
Yeah.
is. It's
And
quite
it's
a
a
bit.
dangerous job because,
Yeah.
you could end up getting, held up and, you're putting your life at risk.
Yeah, you're exactly right. And that's one of the things I didn't list as ATM crime, but that has increased as well as the attacks on armor and CIT companies while
Right.
they're either out at the ATM or delivering cash to really anywhere. They
Yep.
can be attacked at any moment, and a lot of them, because they're short staffed, they're no longer driving with two people. They're driving with one,
Oh my gosh.
which is, and some of these companies don't even provide vests, bulletproof vests for their employees. They have to buy them themselves.
Wow.
Yeah. Yeah.
Well,
So
hopefully
it's
that will change next year and they'll start to grow the armor services because it is important to our credit unions.
hmm absolutely is, and we do need, I think what's going to have to happen is you're going to see an increase in pay awarded to these drivers to try to keep them, which in turn means an increase in the armor costs to our credit unions. So it's going to happen. But at the same time, do you want your ATMs, running at an uptime of 80, 85%? No, you want them
Right.
closer to 95, 98%, or, as close to 100% as you can get.
Right.
Yeah.
Yep. Well,
So the
thank
last,
you.
oh,
Oops, go
I've
ahead.
got,
Sorry. No, you
oh
go
yeah,
ahead.
I've got one more slide. So you're really just talking about something that keeps coming up in our conversations, whether we're talking to small credit unions, large credit unions that are interested in ITMs. And by no means am I encouraging everybody to jump in on ITMs for sure. It's expensive. There is a right place and a right time for it. We do have some smaller credit unions that utilize ITMs very effectively. So it can be done. But again, it's not something that's forced. It really is a conversation that needs to happen. Typically, I'll go out and spend 3 to 4 hours with a credit union going through a workshop on ITMs, really just to have that conversation with the management staff or the staff as a whole to figure out, is it a viable consideration? And if so, then how do we deploy it effectively? So, but one of the things that keeps coming up with our clients, our members, is uh, do we offer surcharge-free access to ATMs? Do we rebate any surcharge fees that our members pay? And a lot of credit unions still feel like they have to rebate all of their members' surcharges. And that's an expensive, well, it's a real cost, I guess is the best way to put it. And I look at it as, if I'm not offering a surcharge-free access to my members, or if I don't have adequate ATM access, and I start rebating them uh, their surcharges, whether it's $4 at a Wells Fargo or $5 at a Key Bank or something like that, and you're basically writing a check to that large bank for access to their ATMs. So I encourage you to not do that. To look at some surcharge-free access for your membership. There definitely is an opportunity for that. You can even do some bin suppression and ATM sharing with credit unions, in your neighborhood, or in your metro area. It does not take much to set something like that up. We've got a little over 4,500 ATMs across the country right now that they come completely free if you're a part of, if you're outsourcing with us, and about 3,000 of those we're actually outsourcing for our clients. So it is a reciprocal that's shared back and forth, which is really nice. But we have some credit unions that write checks for 10, 15, $20,000 in ATM surcharge rebates a month. It would be so much more cost effective to put out 3, 4, 5 ATMs. So even for a small credit union, if you're writing, if you're rebating $1,000, $1,500 a month or whatever it is, it's going to be more effective to put an ATM in place. And then you've got a marketable, brandable unit out there that is an extension of your branch, an extension of your brand, which I think is also key. So, but Christine, that is all I have on my side.
Well, thank you, Joe. I appreciate it. And this recording will go out to all of our credit unions. And so if they have any questions, they'll make sure to either reach out to Dean or myself, and we'll get them your email.
Fantastic. Happy to help in any way we can.
Thank you.
Thank you, Joe.
So thank you.
All right, so next we have Doug from Synergent. Doug has 14 years of experience, is dedicated to data-driven and target marketing. Doug specializes in return on partnership and return on marketing investments at Synergent, holding a certification including Credit Union Certified Marketing Executive and Paragrammic Certified Product Master. Doug has worked with the Maine Credit Union League. Doug and his marketing service team have successfully guided hundreds of credit unions, leading thousands of data-driven initiatives, resulting in over $500 million in credit union growth. So, Doug, you can. Oh, is he here? Oh, there he is.
I am. Can you hear me?
All right.
Can you see me?
I can see you now.
All right. Good.
So if you want to take it away.
Wonderful. I'll get going here. Just want to say hello, welcome everyone. Thank you for taking the time to meet today, taking the time to talk. I just want to make sure that you're getting the best experience. I might shut off my video just after I say hi here quick, just to make sure that I've got the bandwidth to continue to hear me. I am having some issues myself, so just want to make sure that I'm optimizing that for everybody, and we'll get started. All right. Again, thank you for the introduction. It's hard to market on a budget, and even harder to drive success on a small budget. But however, we have ways to not just succeed but exceed expectations when it comes to any budget, and that's what we'll talk about today. So again, thank you for joining. I just wanted to real briefly introduce Synergent from an organizational overview. Today, we'll learn about how to leverage a data-driven approach to drive success in your member marketing, no matter your size or your budget. But whether it's recapturing lending opportunities lost to competition or driving new deposits and investments back to your credit union, onboarding new membership, deepening your relationships with current membership, or driving member product penetration, my hope and desire is you'll walk away with some strategies for leveraging your existing data to increase your marketing effectiveness and to meet your credit union's organizational goals and initiatives. First, a little background on Synergent, who we are, why we exist, and how we can serve and assist your credit union. So quick spoiler alert, we're a QSO and we're here to serve you. Synergent and my Rockstar team, marketing services, we integrate automations for fastest to market turnkey credit union solutions. We offer those at competitive rates. We're owned by and serve only credit unions. And we want to achieve results that exceed other solution providers. So for marketing, this creates a unique subscription set to unlock the power of your member data with automation and to increase engagement, product adoption, and utility for your membership. And a lot of these items that we'll be discussing today are perpetual self-funding growth engines. We call them our suite of services, but it's really designed to deliver results and ROI back to your credit union. So really simple. Our mission is to help credit unions succeed and improve the financial lives of their members. It's simple in a sentence. As we all know, that's a lot more complex as we step through the individual challenges, goals, and objectives that you have. Our vision is to make sure that we're a leader in helping credit unions to be in the right place, at the right time, with the right solutions to meet rapidly evolving member needs. And we have a compassionate culture, an empowered team here in pursuit of that excellence. So I'll be sharing a little bit more on that today. And I'm not going to read the slide to you. You can read it yourselves, but we provide complete integrated best-in-class solutions. As you can see, the wrapper around all those solutions is marketing, just as it is for all of your credit unions. Marketing is how we package and present member-centric solutions. So you don't have to be part of the Jack Henry or Fiserv environments to appreciate the benefits of integrated solutions. And one quick and inexpensive solution is our email marketing platform. It's a world-class platform that we've integrated with parties like Jack Henry, Scimitar via API, which just allow Scimitar core credit unions to trigger any email off of any data transaction or change on the core. And so quick couple examples of these include onboarding or reboarding new or existing members. And we'll share a deeper example of that today. And lending recapture with transactional data mining and some triggered automations there, which we'll also share an example of today. So as I was looking through and preparing today, I just wanted to reiterate that your members want to feel that your credit union understands their needs, and you're able to communicate them in a personal way. And we leverage data in the most effective way to connect with your members meaningfully, where they are in their life stage, for example. And I was looking through last year's MAC and CUNA award-winning campaigns. We work with a lot of credit unions, and we desire to provide award-winning campaign work, consultation, design on the campaigns. And I've got a couple examples to share. But the interesting thing that jumped out at me is there was 8 award winners that we participated with last year. 7 were small to medium-sized credit unions. Most of them were small. So there's no lack of great examples of how small or medium-sized credit unions can hit well above their weight class, even in nationally recognized award organizations like CUNA and MAC. So we'll go over a few of those today. Excited to be sharing a little bit more on that as well. The first story I have to share today is Oswego County Federal Credit Union. They're in Fulton, Mexico, and Oswego, New York. They have about 12,500 members and assets, just south of $1 million. Their problem, challenge, and opportunity, as I'll present it today, is they really wanted to boost auto loan balances. And we worked together as we created a campaign which offered up to $300 cash back for refinanced or new auto loans. So that's up to, not in every case, but up to. And marketed this limited time offer to members using personalized postcards and a highly targeted strategy. So I'll share more about that so you can walk away with some tactics to make your marketing more effective. Members were encouraged to experience financial freedom with a spirited, fun design. In this case, we have a targets of 2,400 current members based on very carefully selected criteria. The credit unions ended up opening over 165 new loans, totaling over 3.2 million in loan balances and increase. And we'll share a little bit more on results. This campaign in particular also won a Marketing Association of Credit Unions, a MAC award. And that highlights and awards marketers who step up their game and create terrific campaigns with tangible results. And the reason I share this example is because any size credit union can see results like this if they leverage their data correctly, if they look to resonate with members, and Oswego and all of your credit unions, obviously no exception to that. Oswego utilized this power of target marketing, data mining, in combination with design, a clear and concise message and a strong offer to make their campaign a success. And their campaign included that design, creative concept, target data, targeted data extract and data mining, copyright and message development, full color postcards, a companion email as well, a unique URL, which redirected them to a loan application page, which we got on the screen here, the email and the redirect to the loan application page, with list prep, mailing services, and then we layer in tracking, monitoring, reporting just to make sure we can report back, just as this case study, and just how things went. And so the strategy here was really kind of leveraging again that data mining and offer $300 cash back, terms up to 72 months. A lot of this probably sounds familiar to you. It might be even something that you're doing today anyway, but making sure you get the message to the right individual member is really, really important. So a limited time offer, online application. This target audience, I wanted to dig in a little bit deeper, was just south of 2,400 targets, actually 2,373 targets specifically, included members making ACH auto loan payments to other lenders. So we have ways of identifying through transactional data mining those members making ACH auto loan payments elsewhere. And that's really low-hanging fruit for you to recapture the loan and help those members save some money, which we know is really great alignment for everybody. Members who have paid off their auto loan recently, so we see there's potentially a new opportunity for additional lending coming up. And then members as well who are due to pay off their loan soon. So we want to keep that conversation going with those members, and then members with a checking account and a loan, but no auto loan with Oswego in this case, or the credit union. And the reason behind that is just that we know that there is a need for lending. So we start to make the careful assumption that there is also additional lending needs as well. So some good targets there that you can take back and increase the effectiveness of your campaigns right off the bat. And then as we get into results and ROI, it's over $9,000 in first year interest income. The targets of 2,400 current members certainly wasn't the entire membership size, but shows you the power of kind of being very strategic and careful with the criteria. And again, 165 new auto loans totaling over 3.2 million in new balances. That's a 12% increase year to year. And we look at ROI in several different ways, and a conversion rate on that 2,400 member target of 3.2%. So that's 3.2% getting an auto loan, not just reacting or responding to the campaign. So that's very, very high conversion rate. And then just a couple other statistics to share. The estimated first year earnings on interest income was $90,000. That's first year. We use that a lot for kind of break-even analysis and ROI. But as you know, the lending relationship goes on much further. And so the estimated interest earnings over the life of these loans was over $243,000. And the return in first year alone was actually $7 for every dollar invested in the marketing campaign in first year interest on income alone. So 7 to 1, right? $1 invested in marketing, $7 in interest income. That's even after yield rates are calculated. I often ask, you know, if I gave you $1 or you gave me $1 and I gave you $7 back, when would you stop doing that? And you wouldn't. That's what's so powerful about these campaigns. They pay for themselves very rapidly, even typically before they've run their course of a typical 90 or 120 days. So whether you're looking to drive lending or engage new or existing members to create a better connection, we're here to help demonstrate your value to your membership and assist with these strategies. And then look to yield the results of your own that exceed your business goals and strategic expectations. So I wanted to pause here before getting into the next story. I've got 2 stories to share today, and just see if there's any questions. I know that we're popping those in the chat, but just wanted to see if anybody has any questions on this first campaign.
I don't see any messages, but that $1 in investment and getting $7 back on return is a really good statistic.
Yes, so it is a good statistic, and I would also add it's on the lower end of these campaigns as far as what you can expect. We aggregate our results. We've done over 1,500 data-driven campaigns, and we aggregate the results. And the average that we see on return on investment is actually $42. So it's quite a bit higher than that too. And I shared that example because not necessarily because it's the best, but it is an award-winning example. And you can expect to actually see even greater results. So yeah, that's
really good.
Really exciting. Yeah. All right, I'll move on to a second example, which is a reboarding and onboarding program results, which are additionally award-winning. What we have here is a Connected Credit Union. They're a 3,800, almost 3,900 member, 45 million in assets credit union based in Augusta, Maine. And their problem, challenge, and opportunity was all around onboarding. And you've probably heard of or familiar with or have your own process of onboarding. The first 90 days of membership, new members are welcomed and informed about your products and services through a series of communication and points of contact to help them digest, right, and become educated on your credit union and what you have to offer. But there's also an additional value and a whole world of potential in offering a parallel program to your members called reboarding. And so this is reaching out to your existing members to make sure they are also informed. You've changed a lot, I imagine, over the last 5 years or so in your product and service offering. And there's nothing worse than hearing from a member, oh, I didn't realize, I left, or I didn't get my loan here because I didn't realize you had lending, or you did this type of loan, or you had online banking or remote deposit capture, or whatever it is. We all have heard those stories that make us cringe. It's really painful to hear those stories. But it shows an opportunity to educate members who may not be aware of all the great investments you've made in products and services, or just generally aware of the breadth of your offering. And so onboarding and reboarding allows for more digestion. And when we pair that with data mining and being very specific, deliberate, and personalizing the approach, so it's not a one-size-fits-all approach to onboarding and reboarding, you really look to resonate with those members, find their needs, identify their needs, and you see some great results, which I'll share with you in a moment here. So we have Connected Credit Union in Augusta, Maine, and they partnered with us to create a quarterly marketing campaign for onboarding and reboarding members. Their goal was to increase product penetration and improve their member retention. And this isn't just for new members, but also existing members as well. And due to the credit union size, a monthly approach was recommended, just made it a little bit more cost effective for them. And before I forget, this campaign that you're looking at here, very affordable, will show how it's paid for itself, but I think it was $7,500, a little less actually, spread out over the course of those quarterly campaigns. So very much achievable. A lot of times onboarding seems like something that might be really expensive or not achievable. And this is extended to all membership, not just new members. So the denominator there too for the effectiveness helps a lot. And I'll show you why when we get to results here in a second. But very successful campaign, won both a CUNA and a MAP award. As you know, the CUNA Diamond Awards are awarded annually and recognize creative excellence and outstanding results. And this won for brand awareness and for the reboarding and onboarding campaign effectiveness as well. So the campaign was unique, reaching out to members to include cash rewards and amounts dependent on the services provided, depending on each member's individual product mix and demographics. They were sent postcards and emails that corresponded to their stage of life and services that could help them connect to what matters most. So we got the nice fun theme there. I want to share a little bit more on what the campaign included. It included the creative concept and design. We work very closely with credit unions to make sure we're resonating with brands, making sure that we're leveraging data and personalization But there's a comprehensive creative process. We look at the data. We spend a lot of time on the data, data extract, data mining to make sure we're understanding the member journey, your current members, and will help most in the targeting and strategic process. Copywriting, messaging, full color postcards, companion email was developed for each stage or each phase of their onboarding program. We had list prep and mailing services, and again, tracking, monitoring, and reporting. Super important for us to gauge how campaigns are creating ROI. And so, with the products mix in mind, the campaign included 5 products and services messages with 15 variable images based on age of the member or life stage of the member, all with clear branding and details. So 15 different pieces went out. So it's more than likely that if you were 2 members living in the same household, you would have received 2 different pieces. Certainly, those were personalized to each member, not just by name, but also by the product and service mix that the member had and what was logically next best for the member based on that product and service mix. So it became very, very personalized down to the individual member. And what we saw from results of this campaign were really compelling. We actually saw a 24% increase in checking accounts and a 22% increase in all loan balances. This is a year-over-year comparison with the same membership pool. So we saw an increase, significant increase, 24 in checking account, 22 in auto loan balances, and a 20% decrease in closed accounts. So we're working on that attrition challenge, which is a challenge for every credit union, to make sure members feel, no pun intended, more connected, right, with the credit union. So they additionally saw, additionally out of the 243 members sent communications about e-statements, 84 of those switched to electronic statements. So they pushed e-statements to members that were not receiving e-statements, and they saw a 34% conversion rate on that initiative. So just on that initiative alone, you're saving, $6 in postage just a year for each one of those members, right? Start to see this pay for itself, but pretty unique that the breakdown of the campaign results and the marketing generated an estimated $154,000 in interest over the life of the loan that tied back to the campaign specifically. So this is attributable to the campaign and the marketing here. 154,000 in new income, almost $60,000, $59,959 being earned in the first year alone. So here you have a campaign, and just in loans that tied back to the campaign, $60,000 in first year income over the $7,500 investment, and that continues up to the $154,000 over the life of the loan, and so on. So very rapidly, this is very achievable, something that you can implement quickly to get in front of your membership and make a big difference. Again, we're talking about that low-hanging fruit in your membership and just getting them more connected and adopting those products and services. Again, a couple of those charts just kind of illustrating some of the things I was talking about. The 90-day campaign for members included auto, checking, and e-statement phases to the onboarding process, but we saw 46 new checking accounts, 78 of those, or 78 new checking accounts over the year prior. 78 of members, existing members, opened checking accounts. Who wouldn't want more checking accounts from your current membership, right? And then a 9% increase in checking accounts, 13% increase in checking accounts open the time period the year prior. So we're seeing attributable lifts all over the place when it comes to year over year in lending alone. And then, with an average conversion, with average conversion rates, we actually saw checking accounts that could be tied back to this list, 2.6% conversion rate on those that received the checking postcard. So it's really hard to get anything north of a 1% average conversion rate. 2.6 is 2.5 times better than kind of your average conversion rate. And so a lot of great statistics that can be shared here. The average conversion rate over the total campaign approach was 4.8%. So you got 4.8% of current and new members to take action and adopt a new product or service, which is just fantastic. And so again, those highlighted statistics, the reboarding portion of this drove over 4.7 million in new loans. Again, not the largest credit union, but driving substantial new lending volume. And just in new loans alone, the campaign paid for itself within 6 months, and this went all year long. So the campaign paid for itself pretty quickly as members took action, even within the first quarter of the campaign. So just terrific results. And so whether you're looking to engage new or existing members or create a better connection of your own, we're here at Synergent to help you demonstrate your value to members and yield results that exceed your business goals and expectations, no matter your size. So I'll leave you with some resources and some next steps to begin to evaluate your own marketing strategies to cultivate better member engagement and product penetration, retention, and growth. But first, I wanted to pause and see if there's any questions you might have before on any of the stories we or anything that we didn't cover. And then I'll share some tools and tips and tricks and leave behinds that we have prepared.
I don't see anything in the chat, but I do have a question, Doug. Out of all your campaigns that you do, which one do you think is the most important campaign that you should do first for, these small credit unions to get the attention of their current members or potential members?
So when you asked it, it broke up a little bit on me, Christine. I'm sorry. You were saying which one would you do first to get the attention of members?
Right. Like which campaign do you think would bring the most activity?
Yeah, that's a great question. And, I'm thankful that the two examples I gave are the two places I would start, right? So recapture campaigns are always a wonderful place to start. They really get kind of the engine moving. They pay for themselves really quickly. They resonate with members, right? Meeting their needs. Same with onboarding and reboarding. It's a really good way to re-engage with members and drive results quickly. And that's one of the reasons I picked both of those. So it's not a coincidence, but to share. But yeah, those are really, really great places to start. We see some great results, and quite honestly, they're kind of at the top of the performance for a lot of the campaigns and initiatives we see.
Okay, thank you.
Another question that I think that comes up a lot is just that, right? So how do we get started? How do you get started today? And so I've got 5 points to leave everyone with. And it's just making sure that you're creating highly personalized marketing for members, right? So you're resonating with members and leveraging your data. You have a whole world of data on your members that other sectors, other industries would just salivate to have. But if you're not leveraging that data approach to target marketing and making sure that you're resonating with members in that way, you're really missing a lot of great opportunity. And you can start small. We certainly didn't get to 1,500 data-driven campaigns overnight. This has been a dozen years of working hard. But we're here to help. We're here to support. I've got some kind of takeaways and opportunities to help us analyze your data and get you a little bit further down that pike too. So I'll share that in a second. We're segmenting audiences with that strategy. Some of the strategies I shared today, hopefully you're walking with some of those tactics. And then monitoring the response rates and tracking adoption for ROI. This is so important to know how your campaigns are performing. What we see is when we do that, it creates a feedback loop, not just to help cultivate loyal lifetime relationships and members, but to improve your next campaign. You see what works, what didn't work. And what we see is there's not a saturation or diminishing returns in campaigns. We always have something we can learn from the results as long as we're tracking appropriately, and we can make the next one better. And reinvigorate, your lending campaigns, your onboarding and reboarding campaigns, like we talked about today. And with time, they actually increase and only get better. And so I wanted to share one kind of special treat for everybody in attendance and everybody who registered. And that's that, we've got this great advantage at Synergent, where we have 2 data mining specialists on staff. And I know that many of you would love to have a data mining specialist on staff. We can provide that for you. And we're able to do that today at no cost. We'll take a peek at your data analysis. You can tell me or my team which snapshot analysis would be most beneficial for you. We have a short little survey that you fill out, and you kind of select your own snapshot analysis. The value of the snapshot analysis is about $2,500. It's no joke. There's no obligation, no strings attached, but it will help you make better decisions, strategic decisions, and how to reach out and make a difference to your credit union. So just to review some of those snapshots that are available to you today as being an attendee, we have recapture snapshot on recapturing loans, which we discussed today. So you can determine which members are making various payment loan types to other financial institutions and gather competitive intelligence on those lenders to uncover opportunities to recapture your membership. And you're in the driver's seat there. You can decide to do what you want with that information. And we have driving payment snapshots, so identifying members who are moving money to and from your credit union through methods such as ACH transfers and RTP, and just to help you better understand who they're choosing to move their money and to where. So that can help you kind of recapture some of that payments movement. We've got onboarding new members and reboarding snapshot analysis, and this just helps analyze and benchmark product adoption, behavior, your demographics based on a year's worth of new membership and existing membership, and just provide you insights to help formulate your new onboarding strategy. And I would just add here that I forgot to mention earlier, the average cost, and this is, I think it's CU Insight that just provided that the average cost of acquiring a new member is over $700 on average for a credit union. So that's a huge investment. Investing a few more dollars to make sure each member is well aware of your products and service mix and resonating with the member to get them off to a strong start is so valuable. So just highly encourage everyone to take a look at that. I challenge everybody to imagine a new member coming in with $700 that you've already invested in them just to get them through the door. And then we have digital product penetration. So your digital products, which we talked a little bit about, but identifying, the digital products that you have, whether it's online banking, e-statements, and so on. There's a lot of value there to understanding that. And then, we talked about reboarding already, and the importance of taking a look at, just how your current membership kind of breaks out in products and service mix, where there are opportunities. And then side of things, detecting members with dormant accounts and or savings accounts at various stages to determine when's the right time to reach out and kind of reinvigorate that relationship. So before demarketing, there's an opportunity to kind of shake the tree one last time. So all really great opportunities for you. Highly encourage you to get the snapshot analysis. It's got a $2,500 value because that's what we typically charge. The value to you is obviously going to be a lot more, especially as you unlock some of the potential there. I just wanted to reiterate, we're here to talk and walk with you as much or as little as you like. So make sure that you reach out. We're here to assist. We're here to serve you. And as always, we wouldn't be here if we weren't supported by, wonderful and talented staff. They helped me put together a nice takeaway for everybody today, which is just kind of a menu of services, suite of services, walks through a few of the items we talked about today: email marketing, onboarding, reboarding, transactional data mining, recapturing loans, a little bit of a special treat, and a fun little digital brochure that'll help you understand more a little bit more of what we're doing, how we do it, and even some of those case studies that you can find. Before I forget, case studies, we have dozens on our website. Highly encourage you, if you've got a product or service initiative or a marketing challenge, we probably have a case study that's shared by credit unions in a cooperative spirit to help you get further down the road to your own success. We share those freely, all available out on our website as well. Make sure that you get this leave behind. And again, just wanted to leave our contact information. It's rightsolutions@citizencorp.com. And just encourage you to reach out at any time. I know we're at 10:30, so I'll wrap it up with that, and I'll come back on screen, see if there's any questions, and just want to say thank you for everyone's time today.
Well, thank you. We really appreciate you showing our credit unions what you have to offer and how they can grow with these marketing initiatives. And if anybody would like to get more information, there's the email, or you can contact Dean or myself, and we will get you to the right person. We appreciate everybody attending these events. Next week is the last week, and it is going to be the top 5 mistakes in human resources. And it is presented by Employers Association of the Northeast. And I appreciate everybody attending, and thank you, Dean. It has been a pleasure.
Thank you, Doug, for today. We did record today's session, so that will be available later this week. And Christine, I know, will push it out to her members, and we will be pushing it out through our daily scan to the CCUA members. And again, if anyone has any questions on anything, feel free to reach out to Joe or Doug directly, or you can reach myself or Christine via email or phone call, and we are happy to relay any questions and information that you might be looking for. Thanks again for joining, and enjoy the rest of your week. Thank you.
Thank you.